just going to turn that on now. All right. And for those who do not know me, I'm Diane Giberson, and I'm with Sutton Group Masters, and I'm a realtor here in Kingston and area for the last 11 years. And I'm always welcome your questions if you have any, and if you feel like you need to reach out afterwards to see what's going on in the market, I'd be happy to answer those questions. The last few months, I've been hosting a few of these sessions with different people. I'll bring them in. We had a chocolatier a couple of months ago, which was awesome. I'm looking for someone who does beer. I don't know, maybe a winemaker. So yeah, feel free to join any of these are just all there for your entertainment and information. So I brought in Brian Matthew because he's an expert in reverse mortgages with the Mortgage Professionals, and it's the company that I highly recommend for mortgages of all kinds. They're a broker, and all my clients get recommended to them first. So please, Brian, take it away, and you can give your background. And
perfect, thank you. So just so you guys know, I'm not going to be putting any big things up on the screen. We're not going to be looking at graphs or charts or information sessions or stuff like that. This is really going to be just sort of an informal chat from me to you about reverse mortgages. But just to give you a little background, I was 18 years with a major chartered bank, and then 28 years, started the Mortgage Professionals in 1989, actually in my garage, which was a fun experience at the time. And we grew and grew and grew, and a whole bunch of years later, 28 years actually, I sold out my partner interest to my daughter and 3 young partners, and they run the company today, and now I work for my daughter. So both my son and my daughter are involved in the business, and they're brokers. I'm 71 years old. And, you know, to most people, they'd look and say, Brian, you should be retired right now. Why are you not retired? And it's because I love what I do, and I'm still healthy enough to do it. My kids are going to take more of the heavy stuff in the future. They're going to be doing a lot of the applications in the background, but I'm going to pretty well specialize in reverse mortgages. I'm also a life agent. So I consult with a lot of first-time buyers on life insurance and their needs for their mortgage and so on. So that's going to be sort of where I'm going in the future. But I think if I'm going to reflect from a senior, I always talk about this is a senior to a senior thing. And, you know, my wife's been married to me for 49 years. She's a trooper because I'm a workaholic, always have been. And so she probably wants, I don't know if she wants me to retire, really. Maybe she doesn't. Maybe she likes me out of the house. But of course, for the last year, that has been impossible because I'm in the house because I can't be in the office. So it's 6 of one, half a dozen of the other. She's going to have to get used to me. My greatest joy right now, greatest job outside of what I do is being a grandfather. I have 4 grandchildren, 13, 10, 9, and 13, 10, 6, and 4. The 4-year-old's a girl and she wants to be 12. But being a grandpa is the absolute greatest job in the world. Actually, I really think what should have happened is we should have been grandparents first and then parents later on, because it's so much fun. So that's one of the reasons I'm just going to specialize in reverse mortgages and deal with people my old age. And I'm going to handle the life insurance, and all the mortgage stuff is my kids are going to help me do that. So reverse mortgages themselves, you know, it's a really hard concept to grasp for a lot of people because it's really hard to advertise reverse mortgages. Reverse mortgages have been around for 30 years. Nobody would know that, but they've been around for 30 years, but they really haven't become very prominent or a lot of interest until the last 4 or 5 years. And that's probably because people want to remain in their homes longer and are looking for ways to do it. And the other thing is reverse mortgages in the past had a much higher rate attached to them than they do today. Now, I'm going to get a couple pet peeves off my back. We're going to talk about myths of the reverse mortgage thing. I'm going to get a couple pet peeves off my back. First of all, the single biggest, and you probably see the advertising on TV, is CHIP. They're the one that's been around for 30 plus years. Reverse mortgages are the single biggest growing segment in the mortgage market, but they are so misunderstood. And the reason that they're misunderstood is because you have a lot of the advertising that we see comes from the US. And in the US, it's a totally different ballgame. There's 52 states and there's 52 or 500 different reverse mortgage companies. So a lot of stuff that you read or you see on the net is based on experience that people have had in the US. And my mom, who lived in Maine, when she passed away, or actually my stepfather passed away, they had a reverse mortgage on their home, and I got a quick education in US uh, reverse mortgages, which are totally different than they are here. But in Canada, there's only two companies, CHIP and Equitable Bank. And they are the most heavily regulated and they are the safest. In fact, doing a reverse mortgage involves more care with a client than any regular mortgage product. Half the time you get a regular mortgage product, you get it through an institution, except for a broker because we have to disclose everything, but you get it through an institution, you won't be told a lot of things. You'll find them out later. With a CHIP mortgage, everything is upfront. Now, CHIP mortgages also are not for everybody. There are people that don't really need a CHIP mortgage. There are alternatives to a CHIP mortgage. And so when I sit down with somebody and I'm looking at their situation, I will look at both sides of the table to see whether the CHIP mortgage is going to fit. So let me talk about my little pet peeves first of all. So I think it's Tom Selleck in the US. I think you see doing the ads for the CHIP mortgage. Now, I know he's a great looking guy. He's a good actor, but let's be honest. He can read any line from any script, and I will put my house up as a bet to say that he's never had a reverse mortgage. He doesn't need a reverse mortgage. He earns millions of dollars a year. He's still on TV. So he is out there saying you should get a reverse mortgage. In Canada, you see, I think it was one of the figure skaters that CHIP had doing some commercials for CHIP. Well, again, it's not real people who have been involved in getting a reverse mortgage and how it's impacted them or how it's worked out. So it's a difficult thing to advertise because maybe some people don't want to admit that they got a reverse mortgage. Maybe they feel it's a bad thing. But the true advertising or the truth behind reverse mortgages is talking to somebody, not what you see, what you hear, what I've heard, or what you've read. It's actually talking to somebody about what a reverse mortgage is and how it works and how it's applicable to some people. So I talked a little bit about regulation. So when we're doing a reverse mortgage, we can't even do a reverse mortgage without a client getting independent legal advice from their lawyer. So unless there's the lawyer sitting down after the documentation has been done and the discussion has been done, and even before they sign everything, they have to go to the lawyer and get independent legal advice. So the lawyer goes over everything with them to make sure they understand what the reverse mortgage is all about. I think that's one of the best things ever because I mean, when you get a normal mortgage, you go to your you go to your lawyer when it's done and you just sort of sign everything, but there's no actual mortgage or lawyer involved in the mortgage processing itself. But there is that upfront consultation with your lawyer to make sure that you understand all the terms and conditions. So I think that's one of the best things about this whole program. So when you see or you hear people saying, oh, this reverse mortgage, I didn't understand it, or it took advantage of me, or it takes advantage of seniors, that's totally, totally, totally wrong. It's the safest thing that you can do. Now, let's talk about myth number one. I'm going to lose my home. And it's funny on social media. I've seen this comment, oh, don't get a reverse mortgage because you're going to lose your home. They're going to take your home from you. It's a scam, yada, yada, yada. Well, again, farthest thing from the truth. In fact, lenders have, the CHIP mortgage has a no loss of equity guarantee. So it's a no negative equity guarantee built into your mortgage. And the reason for that is people don't understand about a reverse mortgage. A reverse mortgage really is based on your age, how old you are, the value of your home, and there's a certain percentage that they will lend you. And you'll see ads on TV saying you get a reverse mortgage at age 55. Well, perhaps you can, but you're going to get very, very little of the equity of your home. And it's age related because they are trying to create a mortgage where your payments are going to be funded by the equity in your home. And it's going to depend what your life expectancy is compared to their actuarial tables as to what your expected life is, as to how that equity is going to be used up over time. There's also the value appreciation of your home over time as well. And a lot of the scenarios that I work out, I build in 2%. I'm pretty conservative. Sometimes I do 1% appreciation when I look at a reverse mortgage in terms of how much equity you're still going to have. The history behind reverse mortgage is that 99% of people who have taken reverse mortgage have equity in their home by the time the reverse mortgage is done. And when I say done, I mean, they're normally for 5-year terms, they're renewable. You can have it for as long as you want or as little as you want. But the sweet spot for what I see in most clients is around the age of around 70. 70 above, you're going to see somebody who's 82 perhaps, it might get up to 55% of the value of the home. But the average that I'm seeing in terms of what they get in terms of dollars is somewhere around the range of about 30 to 33% of the value of their home. So again, ranges from 11% up to as high as 55%. But the average for what I see in the sweet spot for most people borrowing is in that 70 to 80 year range. I mean, you can still access it under 60, but the amount that you're going to get is going to be very little. So you're never going to lose your home. I mean, that's one of the biggest myths out there. Now, there are some what I call myths, but they're truths. And when people say that a reverse mortgage costs you more, yeah, it does. When you go and get a normal mortgage, you're going to pay your lawyer normally to do the paperwork up for you. You may or may not have the cost of an appraisal, and that normally averages, I would say, between an appraisal cost and your legals, probably somewhere between $1,500 to $2,000 by the time you do disbursements. Doing a reverse mortgage, there's a flat fee, and it starts off at $1,795. There's one which is the income advantage mortgage. I'll explain to you in a minute. It's $2,495, and your other costs to that are the cost of an appraisal and whatever your lawyer charges you for independent legal advice, and that ranges by lawyer, but normally it's somewhere around $500. So yeah, the cost is more, but you're paying for something that is different than a regular mortgage. Let's talk about, so we've talked about costs, interest rates. So again, it's the truth. Interest rates are higher. You're getting a mortgage where you don't have to make any payments. The difference in rates from normal mortgage up to a reverse mortgage, those rates right now run about 3.49, I think, to 5.54, roughly on a 3, 4, or 5-year term. You can take fixed, you can take a variable, and the variable is much less. Now, if you get a normal mortgage with a bank or you get a normal line of credit, and again, I've looked at these people, people may qualify for a line of credit and say, okay, I'll put a line of credit on my home instead of reverse mortgage and I can manage it. So I'll take money as I need it and I'll pay the interest cost monthly because I can afford to do so. Or maybe I don't have the money to pay the interest cost, so I'll just keep borrowing on the line of credit every month to pay the interest cost and I'll self-fund it myself. But I mean, that's all up to you in terms of managing. But to qualify that, you're going to have to qualify under the government stress test, which is now 4.79%. It's going to go up to 5.25. And by that stress test is something that the government's brought in across the board for qualification. Your credit has to be good, and obviously you have to have the income so that when we calculate your ratios as to how the government says you can have a mortgage or not have a mortgage, that you're going to qualify. Some people won't qualify for a normal mortgage. In the CHIP mortgage, there's no such income qualification. There's no such credit qualification. All they're really interested in is what is your income and can you pay your normal monthly house expenses? Can you pay your utilities? Can you pay your taxes? Because you're going to have no payments. All you're responsible for is the upkeep of your home. So People who don't qualify for a normal mortgage will probably qualify for a reverse mortgage. So that's a little plus. Now, well, yeah, there's another one. Let's say there's two people in a home, and I've heard the comment, "Oh my God, if your wife or your husband dies, they're going to take your home, they're going to kick you out." Wrong, wrong, wrong. If it's two people that are on the reverse mortgage that own the home together, and one spouse passes away, the other spouse can remain in the house as long as they wish. They don't get kicked out. The equity is still there. It may renew in that spouse's name. But if you have somebody perhaps that dies and you want to pay it out, you have prepayment privileges like you would have in a normal mortgage. There's some unique things too in the reverse mortgage. In the first 3 years of a reverse mortgage, they have a 5%, 4%, 3% prepayment penalty in the early years. And after the third year, it's 3 months interest to get out. However, they have, let's say we have a single person, one person that owns the home and has got the reverse mortgage, and they die, there's no penalty. So the penalty is waived. If that person moves into a nursing home, the penalty is reduced by 50%. So there's some unique little caveats within the reverse mortgage that are unlike you would find in a normal mortgage. Now let's talk about the products. So CHIP has a unique range of different products. There's the standard reverse mortgage. The standard reverse mortgage is an amount that you're approved for that you can take in one lump sum if you want, or you can take up front X number of dollars and then take more of it later on as you need it. There's a fully open CHIP mortgage, and that's more of a short-term type thing, perhaps bridge financing that you might have been looking at and buying a home. Or any short-term need for cash. That's a fully open product. Again, with no payments. It's just fully open. You can take it, draw it all down, make no payments, and pay it out later on. It's an open, very unique little product. They have what they call CHIP Max. CHIP Max allows you to go beyond the normal level that they would lend at. So let's say they say based on your house, you're going to get 30%, but maybe under CHIP Max, they may advance you up to 37%. CHIP Max is a premium product, so they charge a higher rate for it. And the fourth one, which is a unique product, is called the Income Advantage. And the Income Advantage is a product, again, you get approved for a limit, and then you can draw on that approval to supplement your monthly income. And that's a non-taxable income. So let's say you got approved for $150,000, and they're, one of the unique cases that I've seen is somebody who is struggling with the cost of maintaining a home and cost of maintaining their lifestyle because they're on a limited income pension. And we were able to put a reverse mortgage on her home, and the minimum drawdown right off the bat, you have to take 20,000 of that. So we put through 20,000 for her immediately and stuck that into an account, and that was her emergency fund that she had set off to the side. And then we created the opportunity for her to create a monthly income of $1,000 to add to her pension income. So all of a sudden now she had any debts or liabilities that she had were paid. We had $1,000 a month added to her income, and again, that was non-tax. So she was in a much better position than she would have been in the other scenario. Let's talk about the uses. So I just mentioned one. You can supplement your income by using the Income Advantage product, and it's a non-taxable income. We've used them to consolidate debt. We had a situation where an older person still had a mortgage on their home and had some debts, and again was on a limited income situation and didn't want to have the payments. So we consolidated the mortgage and a line of credit that she had all within the mortgage with no payments. And that freed up, I think, pretty close to $1,000 a month out of her income just by using that. We've done them for, as I say, income. We've done them for people that want to supplement their retirement income, because if their income, you know, today, I mean, retirement incomes don't go up as much as expenses do. So, you know, if you're on a fixed income, or, you know, you're looking for ways to supplement that, that's one really good use that we found for the product. I had one client that wanted, I had two clients, one client that wanted to do an early inheritance. He wanted to help his son buy a home, had equity in his home, but really didn't want to use a line of credit, didn't really want to have to pay the monthly payments. And he wanted to give his son $50,000. So we created a chip reverse mortgage on his home. He drew down $50,000, and he still has other monies still available to him to draw down for the future for plans that he may have. We had another lady who, you know, I was talking to this lady and I said, if you had a choice right now, what's on your bucket list? What would you want to stay in your home? So what would you do? She said, well, the first thing she said I'd do is I'd like to renovate my kitchen, but I don't have the money to do it and I can't afford to borrow to do it. And she said, the second thing is, she said, I haven't had a holiday in 11 years. And I said, how about if we could make both of those things happen for you and take care of that first initial need and then provide for something in the future? Well, that's what we ultimately did. We we gave her the money, and she went out and she was like a kid in a candy store, getting contractors in and renovating her kitchen and doing things in her kitchen that she's always wanted to do. And she actually had money, and actually came in about 6 months later and said, I went on a wonderful vacation with my best friend. I haven't been away, and we plan to do more. So that was just one little thing that we did. Healthcare costs. So you want to stay in your home, but we know as people age, and I certainly saw it with my mother who had Alzheimer's, and you know, I see it. My wife's mother is 99 years old and still lives at home. And she's lucky she has her sisters and her brother to help her. I mean, it takes a village to take care of somebody, but there's a lot of costs involved in that too. And there's costs for bringing in healthcare workers and support workers and all the rest. And in one case, we sat down and we talked to a family, and you know, it's really wise to bring the family into this, and even to bring your kids into this, depending on the situation, what you're talking about, because we put in place a plan to put something in place for them where we would create a reverse mortgage in the future on her property that would give the kids enough money to take care of her, to stay at home, because she was going to need VON. She was going to need a lot of things that she didn't have the money to afford to do, and the kids didn't have enough money to afford it. So basically, we set that plan in place. Hasn't been done yet, but at least we talked about a plan that we could put in place. And that lady would get a fairly high equity amount out of her house, because she's 81 right now, and she's, you know, in pretty good health. But as we all know, you never know when lightning is going to strike. So we put that plan in place. Let's see what else we got. We had somebody else that we were talking to who wanted to downsize their home. We haven't done this one yet. This again was just a discussion, but they wanted to downsize their home, and they and Diane will tell you this. Used to be when you downsized your home, you thought, okay, I'm going to sell my home for X, and I'm going to buy this other smaller home for over here, and then I'm going to put some money in the bank. That ain't happening. I mean, you may get a lot of money for your home, but half the time now, the downsize thing that you're going to buy, you're going to reinvest every dollar that you got, or you may need more money to go into the next place. So in this particular situation, we were talking to the client about how they could do that by creating a reverse mortgage on the new property, which would be the difference in price that they'd have to pay between the sale of their property and the new one. So they could actually go into this property without a mortgage. They'd have a mortgage, but they wouldn't have to make any payments on it, and it would facilitate their move from property A to property B. Interestingly enough, the one thing on that gentleman's mind was not only moving to the smaller place, but he'd never owned a Cadillac. And so the discussion also revolved around, he said, at my age, he says, I don't know how long I got, but he said, if we can do this, can we build enough money in that I can buy myself a nice caddy? Because I want to go out in style. So the discussion with him revolved around doing a small mortgage on their house and also putting some money aside to buy a Cadillac. So that basically, that gives you sort of a broad overview of the reverse mortgage product. And as I said, the analysis in a reverse mortgage product is seeing what you could qualify for potentially outside of a reverse mortgage. What would be the implications of that? Or maybe you don't qualify for that, or maybe you need that income supplement, and you know how that's created. Everybody's needs are different. So with a reverse mortgage, they have such a diversity of product that we can design the product to suit the lifestyle that the people want in the future. So yeah, you'll pay a higher rate. You're not making any payments. But you know, if you take a look at the rate costs compared to them, where if you don't qualify, it's a non-issue anyways, because your only alternative if you don't qualify is to go to a private lender. And I can tell you, private lenders charge a hell of a lot more than what CHIP does, and you got to make payments. So it's a lot cheaper than that. But you know, relative, you know, to a normal mortgage, if you compare a normal 5-year rate right now to what CHIP's rate is, you're paying almost a little under 3% more on a 5-year fixed. And you know, variable rates, most of them are being done at a discount right now, and CHIP's rate, I think, is prime plus 1.54. So you're paying a premium on the rate, but you get a lot of benefits for it. So with that, that's the end of my informal gab, and I'm going to open it up for anybody that has any questions.
Yeah, everybody can just unmute themselves if you have a question, and we'll go from there.
Don't tell me I've done that good a job with this that you haven't got something to throw and say, Brian, what if? What if?
Anna, go ahead.
Yes, go ahead.
Hi, Brian. Thank you so much for your presentation. It certainly has cleared up a few questions I had in my mind.
They can hear us now.
Am I on? Yeah, I'm on. One question I have is at the time that the house does sell.
Yep.
And the reverse mortgage is paid off in order to clear title, and if that's the only thing that's registered on title,
yep.
What I don't know. I'm having a hard time actually formulating.
It gets paid out like a normal mortgage.
Like a normal mortgage. Okay.
Yeah, whatever the balance is. Now, one thing I should mention too on the appraised value, I recently did a reverse mortgage, and CHIP took a look at the value of the home, and they're concerned about the substantial increase in values. So what they did was they actually put a holdback in place. So when they actually looked at the value of the house, they said, we're going to take the value of the house and we're going to discount it. And I think in this case, it was 10%. We're still going to approve you for the higher amount based on that current value, but we're going to hold that 10% back. And the reason that they're doing it is because they don't want to advance you too much money based on what the current value could be, because everything is based on age and the length of time that you're going to have the mortgage and how that's going to eat up your equity. So they didn't want to create a situation. Now, what they're going to do then is they're going to reanalyze that situation. And I think the time frame was 2 years. They're going to reanalyze that situation in 2 years, and if the value still stands up, and you're not going to have to pay for the appraisal, they would. The value still stands up. They're just going to say, okay, fine. We've just increased your value or increased your availability by another 10%, which was originally what you're approved for, anyways. And at the end of a term, you can also, redo the value that you have based on the current value if you should need to increase it.
Right. And thank you so much for that, because that was also another question with regards to the way the market is going right now, which I don't think it's not healthy. I full disclosure here, I'm a realtor in Barrie. So,
yep.
So we're seeing the same thing happening, anywhere within 2 to 3 hours of the GTA. So that was another question with regards to
Yeah,
the
it's
what I'm calling the
crazy.
artificial values that we're seeing right now, because there is going to be a correction.
Yeah, well, that's why I really like this company, because they think. And I mean, their no negative equity guarantee is because they think of all these things in the future. They think of value appreciation. They think of current value. And again, they're being very cautious in this market, because you're a realtor, Diane, you're a realtor, prices have gone up by 20-30%, it's insane. It's insane.
It's
So you don't want to put somebody in a situation where you say, okay, your house is $1 million and now it's worth $1.3 million. We're going to give you this. And then all of a sudden, within 2 or 3 years, you're back down to $1.1 million and you go, uh-oh, our no negative equity guarantee isn't going to work. So they examine each area case by case. And that's what I like about them. They're conservative. Everything is meant to protect the client. Everything is meant to protect the client. And if that's the message that I could bring out to this group more so than anything else, in my 50 years in finance, this is the only mortgage product that I can truthfully say has the client's best interest in mind.
That's very reassuring to hear.
Yeah, because they know that they're seniors. They don't want publicity of taking advantage of seniors. It's the last thing they want. They are there for a specific purpose, because they realize there's a need, and there's a huge need out there right now, because they're seeing growth in the reverse mortgage sector like they've never seen before. And I know people want to stay in their homes longer. Right now, if you consider COVID, would you take your parent and say, okay, we're going to put you into a retirement home or a nursing home? Not on your life, you wouldn't. And there's parents and people, again, where you talk to them and say, well, I can think of one recent conversation. You put me into that retirement home and I'm going to die. And it's true. It's true. But again, staying in their home, depending on their age and their health and everything else, is costly. It's costly because you need to pay for a lot of things. And that's one of the things where COVID or where the chip mortgage shines, because it can help. I was listening to a presentation, and one of the people said they had to equip their home with wheelchair ramps and widening doors and all the rest of it. And there's subsidies and stuff to help with that, but that still doesn't cover
Not enough.
not even close to the cost. So that's one of the areas where CHIP really shines.
Thank you.
You're welcome. Any other questions?
Anybody else have anything?
Hi, Diane, it's Scott.
Yeah.
Hey, Scott.
I'm only 60, but if I plan on staying in my home for 10 years, how does that work?
Okay. So again, the whole thing about the way CHIP relates is CHIP relates to age in terms of value, because they're going to make an estimate based on actuarial tables and say, you know what, you're 60 and we think you might live to 80. So that's 20 years. And we got to take a look at your picture over 20 years. What's your home worth now? What's the appreciation value? So let me just see. I made a couple notes here before. On age 60, the average that you would get in value of your home is around 16 to 21%. So the reason that it's low is because you're 60.
Because
Yeah. Now, if you were sitting there, Scott, and you're telling me I'm 80, you'd get 37 to 53% of the value of your home.
mm-hmm.
Okay. So when you see the ads and the ads say, oh, you can get it at 55. I don't know about Toronto, but I don't see anybody getting a reverse mortgage or needing one at age 55.
Mm-hmm.
I see the sweet spot for most people somewhere around 68, 70, 71, 72, 75. And again, depending on circumstances, the other thing we've seen too, and you read about it all the time, people rely on their pensions, and there's been so many places where you know, companies have closed down and the pension that somebody thought they had, they're not getting, or the pension that they had is reduced and all of a sudden their income has changed. And they were relying on X number of dollars coming in before. Well, with an income advantage mortgage, if they have the equity, they can turn around and not only replace that income that was taxable, but replace it with non-taxable income and bring their lifestyle back up to where they were.
Right. Thank you.
You're welcome. Anybody else?
I have a question. It's Kathy.
Yes, Kathy.
So the money that you're paying is just the interest on the so-called loan or the reverse mortgage. So that's what you're paying?
Yeah. Now,
Okay.
the interest accrues. So whatever that interest is per month gets added to the principal. Then it's the compounding effect of that each month because that keeps getting added. Now, I have one client who I put into reverse mortgage, and she opted to pay some of the interest. And you can do that. I mean, you can use prepayments against a mortgage if you want. And she had some money and she opted to do it. But yeah, there's no payments at all. The equity in your house is actually being used to fund those payments on the mortgage. And it's only based on what you draw. So if it's an income advantage mortgage, you have to draw 20,000 at the outset, so you'd pay interest on 20,000. But if you're only drawing maybe 1,000 per month or 2,000 a month on that, then you know that's the only amount that's being added every month to your mortgage.
Sorry, folks. That was me. I was trying to find out where that noise was coming from.
And let me just add another note on that income advantage product again. I did another one which was interesting because I had a couple who had a plan in place to sell their place in 5 years, but their lifestyle wasn't what they wanted to have in the next 5 years because their income was less than what they'd made in the past. So what we did is we actually created an income advantage mortgage to give them an extra $2,000 a month, non-taxed in their income, which boosted their lifestyle back up to where they wanted to be, and then worked out where their mortgage is going to be at the end of 5 years. And, you know, and they still had equity, had lots of equity in their home, but, you know, they were able to have that extra income that supplemented the lifestyle that they wanted to have before and use their equity to do it.
Brian, just to clarify something Catherine said, now you said there's no payments on a month-to-month basis. So
Nope.
Does that include the interest? You don't pay the interest
Nope.
either?
Pay nothing, zero. The interest accrues. There's no principal payment whatsoever. You're borrowing and you're simply paying the interest.
So
There's no
basically, like if you had 100,000 equity in your home that you're borrowing, it just keeps whittling down. So at the end, you're less that amount of money.
Exactly. But again, when we look at creating scenarios for people, I'm old school. I'm a pretty conservative guy. So, you know, I think the last scenario I built was on a value appreciation of 2% per year. Well, I got blown out of the water on that because it's been 20%, over 20% in the last year. But I mean, that's how conservative we looked at it and said, okay, if your home only appreciated in value by 2% for the next 5 years, and then we went to the next 5 years again and said, okay, let's assume you took this out for 10. This is where you would be. This is what the mortgage would amount to. And this is how much equity that you would still have in your home. And bear in mind, it's not like a mortgage where you're borrowing 65 or 70% or 80% of the value of your home. I mean, the average that I see is, you know, somewhere in that 30%, 30 to 35% range.
I have another question.
Yes.
So when you say, what are you referring to when you say the mortgage? I'm a little bit confused.
Okay, so what it's called a reverse mortgage. It is a
Oh, okay.
lien that is put on your home, just like
got it.
a regular mortgage. Don't tell me I've done such a good job of doing this that you guys haven't got any. I mean, man, if we were on Facebook right now, I can sure the Facebook would be lighting up saying, "Oh my God, you're telling them the wrong thing. You're telling the good." And that's why I did this thing, because it gets me fired up when I read all this stuff on Facebook and people are saying, oh God, you shouldn't do this because I heard or I saw. And you know what? It's as I say, it's not for everybody, but it's a product that has an application in so many cases, and certainly now because values have gone up and people want to stay in their homes. We're seeing it more and more and more and more.
I
Well,
have
and
one question. Oh, sorry.
Yeah.
Oh, go ahead,
So
go ahead,
just-
Catherine.
Again, the equity, so if your mortgage was paid off and your house was worth 400 or something like that, and then you had, like, how does it affect the equity of your home in the long run?
Well, the mortgage itself, whatever is advanced, depending on what you take of that. So again, the examination of this gets down to what is the value of your home? What is your age?
Yeah.
Because it's age related, and that sets the amount of money that you're approved for. Okay. Now that approval then is, okay, I want it all. I only want 20,000 of it. I want it available to me so I can take money when I need it. And so that equity that sits there, from day one, if your home's worth 500,000 and they give you $100,000 and you borrow $100,000, the clock starts ticking then because you owe $100,000 plus the interest. And simple interest, 5% a year, $5,000. The end of the year, you're going to owe a little more than $5,000 because it's compounded. So at the end of year one, you owe 105,000, roughly.
so it's simply just a loan that is growing. And then when
Yep.
you sell your home, it comes off of the amount of equity you get out of your home.
Exactly. Yep.
Okay.
Precisely.
Yeah.
Yeah.
It's
Okay.
funny. I was thinking when I was doing this tonight and writing some notes down. I don't do a huge bunch of business in Toronto. I mean, I do it all across Canada, but I haven't done one of these in Toronto. But I was wondering how many reverse mortgages people have done to buy property in Florida.
No,
Okay, now you got me
I
thinking,
have,
Brian.
I haven't. I haven't, but this is very interesting because I just have bought a condo
really,
in
eh?
Florida. So, yes, and Diane, this is a total surprise to you. But so I'm looking at this
Yeah.
presentation tonight, Brian, twofold. One, personally, and second of all, for my clients and just for my friends in
Yeah.
general to get
See that
information.
it's interesting because that's what I was thinking to myself when I was thinking about this. And I was saying, I wonder how many people, finance themselves in Canada, because it's really hard to get mortgages down in the US, right? And
Yeah.
and
I'm
and
self-funded.
now they're paying for it, but they don't have the enjoyment of it until we get over this COVID thing. So I was thinking to myself, that would be again an ideal situation if
Yeah.
they, again, if they can afford it, great, then stay with what they've got, but if they can't, if they want that off their back or they want, to free it up, then the reverse mortgage would be a perfect thing to take that equity in their home, replace it with no payments.
Yeah, exactly.
Okay, now you got me thinking, but I'm too young, so maybe.
Oh,
man.
now come on, Diane, you're giving something away here.
I still love the one about the guy that wanted a Cadillac. I thought that was absolutely
that's pretty
priceless. His bucket list was, I want a Cadillac and can we do it? I said, yeah, you can do whatever you want. You want a Cadillac, you go out and get the nicest Cadillac you can find out there. And I don't have to make any payments. No, not at all. Because I went and priced them out. When I priced them out, they were expensive and they were going to give me financing like over 10 years. I may be dead in 10 years. So it was hilarious.
So Brian, just on a, maybe from the realtor's point of view, so if there was a client that did have a reverse mortgage on their current home and then decided to move into a small condo, does that reverse mortgage follow them at all, or does it get paid out and
No,
then?
it gets paid out and they would requalify then for a new reverse mortgage based on the value of that property and of course their age at that particular time.
Okay. And how have the interest rates been on the chip mortgages as far as stability versus?
When rates drop below 2% on normal financing, the chip rates, I think, were down around 4.79 for a 5-year. They're 5.14 right now. So they haven't gone up that significantly, in comparison to what we've seen rates do in the regular mortgage market, because we had, first time buyers with 5% down, we're getting rates around 1.69%, and those rates now are up around 1.99. So, it's relative to the market.
So the other thing you mentioned is the value of a house gets escalated as well by 2% or whatever conservative amount they said. So can you literally take that 2% off of the 5% and say, really, the net is 3% value?
Well, I mean, you could, but that's that 2% valuation that I can use 2%, 3%, 4% in my calculator. It's just something personally that I do to say, okay, let's be very conservative and say that your house goes up 2%. And where are you going to be if your house goes up 2% over the next 5 years? That's where your house is going to be. That's what it's going to be worth. And here's your mortgage on the other side, and this is where your mortgage is going to be. I mean, hypothetically, you could say that one offsets the other, but you could say that about a normal mortgage anyway. Here's a normal mortgage, and my house is going up by 2%. The 2% is really just more of a guesstimator, if you want to call it, on a conservative basis. Some people would base it on 4, some people would say it on 5. And if you go on historic trends, of course, it's off the table now, because what do you use? But I don't care that they've gone up 15 or 20%. I'm going to use 2%. I'm not budging from that, because I want to be conservative.
Yeah. And it's all about protecting the client.
Yeah, absolutely.
Absolutely. 100%.
Yeah, absolutely. And let's face it, I mean, you're dealing with a vulnerable population. You're dealing with families as well, because what the parent does, is going to impact the heirs or the children down the road. In my case with my reverse mortgage, I mean, my mother and my stepfather told me they were doing a reverse mortgage, but they didn't sort of bring me into the details. So when he passed away and I was handling the estate, I had to jump in and find out about everything to do with the reverse mortgage. And there was a lot of things in that reverse mortgage in the US that aren't in here in Canada.
Mhm.
When you sign and you go and everything is in front of you, the picture exactly as to where there's nothing hidden.
No mystery.
No mystery, nothing hidden. Another myth I saw on Facebook. Oh, there's hidden costs. There's nothing hidden.
Okay, awesome.
Great.
Anybody else? We exhausted?
So
All right.
Diane, can you send us Brian's contact information?
I sure will. I'll send it to
That'd be great.
everybody, and you are more than welcome to contact him.
Yeah, and if you'll get my personal contact information. If you have a particular situation that you want to talk about, give me a call, and we'll yak. We may even do one of these things. I may have a glass of wine, but I'm on this diet program right now, and I can't do that until I can't do that until I get to the end of May. I'll tell you, when I hit the end of May, well, if we're doing the conference after the end of May, I'll guarantee I'll have a big glass of wine in that one.
Great. Okay, thanks again, Brian.
Okay, thanks for joining us, folks. Hope I gave you.
And don't hesitate to reach out if you have any questions to either myself or Brian.
Thanks so much.
Yeah, guys,
Thank
have a
you.
good night.
Thanks so much.
Thanks.
Keep well, everyone.
You as well.
Bye.